Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. All right, we are talking about cryptocurrency and transactions that need to be reported on your taxes. One of the things that I shared with you is that the IRS has launched Operation Hidden Treasure, and they are coming for cryptocurrency users who have not been reporting their transactions. So today I wanted to share a video to let you know what kind of things that you need to be reporting on your taxes. All right. So let's get this out the way. If you are purchasing cryptocurrency and you are a hodler holding on for dear lifer, if you are just purchasing cryptocurrency and holding on to it, you got nothing to report. Okay, so you can now walk away from this from this broadcast. Now, everybody else, listen up. First thing, if you are receiving cryptocurrency as payment, that is reportable. If you are receiving cryptocurrency as payment for a product or service, that is reportable as income. And it's the important thing for you to note here is to track your basis, because if you accept cryptocurrency as payment, the value of that cryptocurrency on that day, so let's say you receive $500 in Bitcoin, right? So that $500 is your basis. Now, if you go ahead and, and just cash that out immediately and you got your $500, fantastic. If you choose to hold on to that, you need to make sure that you're tracking the basis on that cryptocurrency, because when you go to sell later, you're going to have to pay for any gain or also report any loss. Okay. But when you receive cryptocurrency as payment for a product or service, it is counted as income at that time. If you're a business owner, you are subject to self-employment tax, depending on what your business structure is. Okay. So that's number one. Number two, paying for goods and services with cryptocurrency. Well, it's counted as a sale. So if you are paying someone else with your cryptocurrency, you have to know the basis of, what that cryptocurrency was when you got it and what you're selling it for, and if you sold it as a gain or loss. All right. So receiving as payment and also paying for other goods and services. If you are mining for cryptocurrency, that's when, I know y'all seen the stories of people having these humongous computers that take up full trailers and warehouses that are performing these complex calculations, and what they're doing is really confirming that a specific transaction has happened. And so that's what mining is. And when you're mining, you're earning cryptocurrency. When you get, when you confirm the transaction, you get that award. And so that is also counted as income. Okay. So mining is, self-employed income, or again, depending on what your business structure is. If you are receiving interest on your cryptocurrency, that is counted as income as well. A lot of platforms are allowing you to put your cryptocurrency in some sort of account that's interest bearing. And so whatever interest that you earn on that cryptocurrency, that is also taxable, just like with bank interest. All right. And then trading. I saved trading for last because this has been a very hot button topic from day one. So a couple months ago, maybe not even more than 2 months ago at this time, the IRS legal counsel issued an opinion that the 1031 exchange was not available for cryptocurrency. And so any exchanges that happened before the Tax Cuts and Jobs Act, the 1031 exchange did not apply. The reason that the Tax Cuts and Jobs Act is significant here is because in the Tax Cuts and Jobs Act, it specifically restricted 1031 exchange to real property only. That was the intent of the 1031 exchange to begin with. And so in reality, the 1031 did not apply to cryptocurrency. However, there has, a lot of back and forth about it. but there has been nobody has gone to court to challenge that yet. So we'll see when that happens. But definitely after, December 31st, 2017, starting 2018, those 1031 exchanges definitely does not apply to cryptocurrency. Okay, so there's no tax-free trading of cryptocurrency. So if you take your Bitcoin and buy Ethereum, if you take Ethereum and buy your NFTs, those are all taxable transactions that need to be reported. I know one of the things that happened way, back in 2017, there was a really big splash on the internet about cryptocurrency, where I believe it started to really go mainstream, and people were talking about how they bought coffee with their Bitcoin, they bought TVs, they bought cars, they bought all this stuff with their Bitcoin. All those types of transactions are reportable transactions, and you should have been reporting them. Also, one thing I forgot to mention on that is that these platforms, Coinbase, I know for sure. I'm not sure about Kraken and Circle, but they're also, giving crypto rewards where if you're referring people to their platform, then they're giving rewards. Those rewards are also taxable. Okay, those are counted as income, and they're going to be issuing the 1099 miscellaneous for those rewards. So that will be reported for rewards $600 or more. They were reporting on 1099Ks. I'm not sure if they're going to continue to do that. I was reading an article that said Coinbase is not going to issue 1099Ks anymore. So we'll have to see what happens with that at the end of this year. And, the 1099Ks were causing confusion anyway, simply because 1099Ks are for third-party payment settlement entities like, PayPal and Stripe, that kind of thing. That was the intent of the 1099K. But Coinbase and other platforms were issuing 1099Ks. The transactions were being reported, but there was, a hiccup at the IRS because they're looking for business income versus crypto trading income. So that was just a mess that, it is what it is. It just kind of happened, and, people just had to fix it. But as an aside, but just know that these platforms that are giving awards, referral awards in cryptocurrency, that is counted as income. So you count it as income, and you still got to know the basis of that in order for you to properly report your gains or losses in the future. So just to wrap this up, the things that need to be reported: if you trade one cryptocurrency for another, that's reportable on your taxes. If you receive payment of cryptocurrency for your goods or services, that's reportable as income, and it establishes your basis for that cryptocurrency going forward. If you pay for services with your cryptocurrency, that counts as a sale of your cryptocurrency, and that is, you report the gain or loss on your taxes. If you are mining for cryptocurrency, then that is counted as income. All right. And also interest. If you receive interest on your cryptocurrency, that is counted as income as well. But if you're just buying and holding on for dear life, you're good. There's nothing to report until you actually sell your cryptocurrency or draw it out. Okay. So those are the transactions that need to be reported on your cryptocurrency. If you have not done so, okay, if you know you have these transactions, that you may have filed your taxes previously and not reported these transactions, go back and amend. Will you have a tax bill? Maybe, depending on how all that fell out, okay? But go back and do it, because if the IRS comes for you before you get to the IRS, a lot of your options in dealing with the additional tax that may be due goes right out the window, okay? So that's it for today, folks. Thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.